Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to CEO Mark Smithson and CFO Josh Egan of Marks Electrical, a leading online retailer of all things domestic appliances such as fridges, freezers, dishwashers, tellies, all kinds of domestic appliances. So welcome, gents.
Thanks, Paul. Did you say
well, big congrats, guys, on this morning's inline trading update, which frankly is a terrific result given where other rivals like Currys and AO World have been. So well done there. But before we sort of dig into the details, Mark, I don't suppose you could quickly shed a bit of light on the sort of the health of the consumer in a sort of the purchasing these type of appliances.
Yeah, thanks, Paul. Yeah, well, it's very, very tough. You know, it's whatever you're selling, whether you're selling T-shirts, lawnmowers, garden sheds, it's got to be difficult for everybody. You know, even with the change in weather. But there's definitely a pent-up demand building. You can see that. People staving off buying a new product. You know, as they're doing any category, they sort of make do with what they've currently got. Say your lawnmower's not working quite as well as it should do. You perhaps get it sharpened rather than buying a new one. You know, the garden furniture, some of them might have fallen off on it, you know, and you'll make do with it. So with the washing machine or a dishwasher, more so with a dishwasher, a bit like you staved that off. You know, you bought one off us, didn't you, recently? But you know,
yeah, well, I've got to give you a big thanks for that, actually, Mark, because your guys, Lee and Alan, just did a fabulous job. They came in at 10 to 8 and took the old one, and you know, I mean, that was their third job of the day. So I mean, yeah, huge big thanks for that.
Thanks, Paul. Well, that's what we do. You know, we get there nice and early, get the job done, take away all your packaging and your old appliance, you know, if you're paying extra for it. And that's what people want, isn't it? You know, they want the job doing swiftly, you know, and on time. But, you know, for example, the dishwasher sector, you know, we've seen that soften slightly as people probably think, you know what, I can stave off with that. I don't need a new dishwasher if it's not working correctly. Whereas a washing machine, you know, even you might get sick of putting your chair against a washing machine door, reading a book to make do with it if the door catch was broken. I'm joking. You're not that mean. I know that.
So Mark, just putting that together. Okay, we've got a really tough environment, as everyone, you know, everybody in the market has been saying that. But let's be clear about it. Your trading update, you saw like-for-like sales growth of 13-14%. The sort of like the domestic appliance market was down 20% in the same sort of period. So what's sort of like the reasons, the rationale for sort of like, you know, bucking this trend? I mean, obviously you're doing something really well, or the brand is chiming with consumers because you're winning market share hand over fist.
Yeah, I mean, we're still the UK's best kept secret, Paul, as Pamela Gordon depicted as I've said many a time. But it's all about you service, isn't it? You know, you keep giving great service. All right, it's a longer burn for getting the revenue, but it's, you know, you keep doing a great job. All right, we don't get it right every time, but with having our own logistics, our own vertically integrated logistics, it means that if we make a mistake, you know, or when we make a mistake, we do make mistakes, we can rectify it the next day. You know, we can solve problems quickly because we've got our own logistics, and that's what gives you a great market leading customer service and free next day delivery. You know, people, when your machine breaks down, you know, you need a new product straight away. You know, you can wait till tomorrow. If your fridge freezer, you know, starts to leak water all over the floor, it means it's defrosting. It's too hot. You know, the motor's working overtime, so you need a new product ASAP. And we're the fifth emergency service. We can get there tomorrow.
Well, you did that with me. Now, Josh, just in terms of the sort of like on the marketing side, now, I'm a sort of like a first-time user, and I had an unbelievably good experience with Lee and Alan. I mean, I just tip the hat to those guys. Real accountability. Now, how much of that sort of like blend of sales increase comes from existing customers, or you know, basically new customers who are sort of recommending to other people this viral sort of marketing, word of mouth?
No, thanks, Paul. It's I mean, it's a combination of both, Paul. It really is. We've seen a slight improvement in our returning customer rate versus last year. So that's up about 1%, which is nice to see. But we're still seeing pretty strong growth, both in the new customer and the returning customer rate.
And what about the sort of like the 13-14% increase in like-for-like sales? How much is that price and how much is in volume? I'm guessing most of it's the latter.
Yeah, we don't give the exact split, but I can tell you that the volume growth that we've seen in those 4 months is higher than the revenue growth. So yeah, we are doing more volume.
And given your sort of exposure to that sort of like the premium level of appliances, is that helping you as well in terms of the social sort of demographic of the target audience? Because I mean, it's, you know, it's people like, you know, me who go for maybe a brand or something like that, and therefore, you know, I don't mind spend. Well, all I want is great service and a product which comes in and works.
Yeah, I mean, it's we are seeing all brands growing, Paul, which is great for us to see. So we're seeing a wider range of brands than we did last year, because as the brand awareness has grown, obviously that customer base has grown as well. So we are appealing to a wider demographic than we did previously. But we are still selling some of the big brands, aren't we, Mark?
Yeah, across the board, Josh. Whether it be Miele, Indesit, Beko, we do focus, as we've said before, on the premium sector, Paul. But you know, as people get to know us, they start buying the other brands as well, which is great. We don't want all our eggs in one basket. You know, we've seen the market's been very, very difficult. But in fact, we've seen 14 consecutive months of the online market declining.
And you've had 14 months of growth, haven't you, Mark?
Yeah, we have. Well, more than that. But it just, you know, you can have a recession. We're already in a recession. So, you know, we're bucking the trend already, and we will continue to do so. And that's with your market leading service. If you've got a unique proposition, which we have, you know, we deliver everything ourselves. Well, virtually everything, apart from the odd vacuum cleaner, which goes on third party logistics. But doing it all yourself, having your own trained installers makes a massive difference. It really does. And we're in a good position. You know, everything's been difficult for years. You know, it's particularly difficult now, but we're still growing. In fact, we're growing faster now than we ever have done. Sorry, not right this present month, but you know, we are growing very quickly, which is great. And that's down to a great team. You know, Josh with all the guys looking at every single, you know, stat all the time. We don't pat ourselves on the back for what we're good at. We look at all the negative positions. It's like, yeah, we look at the sales report every morning, comes out 12:05. You either read it at night before you go to sleep, or 5 a.m. everyone's on email. And we did well with Rangemaster, poorly with Zanussi, AEG were up, you know, American fridge freezers were up or down, cooking's down. You know, we look at everything, and we do not pat ourselves on the back. It's all about where are the opportunities, isn't it, John?
Well, I'll pat you on the back because I mean, basically, you can quote my wife on it, is that she's so delighted with the dishwasher that we've got a dodgy washing machine and a potential new cooker coming down the line. Not at the moment, but we're just letting them run for a moment. But they're going to be packed up in the next 12 months. I know, she's coming to you. Now, Mark, just when we talked last time, you mentioned about obviously supply chain issues in terms of difficult to get in product, and that was obviously one of the Achilles heel of many of your rivals last year because they didn't have enough stock. I'm guessing that's obviously starting to ease, isn't it?
Yeah, definitely, Paul. I mean, he started easing in, you know, April, May. You could see it, whereas before we were looking to get the stock, whereas now the suppliers are coming at us with offers, which is great. You know, they've got the stock building up in containers at the docks, so they need to get rid of it quickly because it's incurring demurrage every day it sits there. Now each container, it's £100 a container per day, so it soon adds up. If you've got, you know, 200 or 300 containers sat there that maybe the likes of Currys have over forecast or Argos have over forecast, the sales aren't quite what they expected. You know, because we're growing and we've got such a small market share, it's easy for us to take advantage of those opportunities. You know, they thought they'd probably keep growing and the market's softened, so they're the ones that get hit, and that enables us to come in and take advantage of those offers. But we're definitely seeing, you know, prices, you know, we've seen the peak, definitely.
Well, the stronger getting stronger there, aren't they? I mean, I did notice Berenberg, one of the brokers out there, was predicting a market share gain of, I think for you guys, 0.3% per annum, and you blew that to pieces, haven't you? Because I think your online share now is over 2%. So you've made a huge step up in the last 12 months.
That's just through, you know, everyone focusing on their individual department and make sure your buying's more accurate and you're looking at your age stock, you're turning it over quickly, offering more interest-free credit. With Josh has brought on the likes of Klarna, ClearPay, ZipPay as well. So we've got lots of different options for customers to buy, and it's making it more flexible for them. So when your market's, you know, tough and people have got less money in the pockets, then you need to give them, these options of free, interest-free credit effectively, which is what these Klarna options are. And that really is useful. You can have 4 equal payments of, say your washing machine's £400. You've got 4 payments of £100. You're paying no extra. We take the hit with Klarna, and when we negotiate deals and get the suppliers to try and work deals for the customer as well as ourselves. So, that's what it's all about, monitoring your business very carefully and understanding what the market's doing.
So just on that one then, Josh, in terms of the sort of cost and the working capital side, can you just walk us through what you're seeing in terms of, presumably your sort of your cost of sales is going down or easing, but I guess the marketing with its greater expense, etc., is actually getting a bit tougher. Is that sort of like, can you just take us through those expenses?
Yeah, I mean, there's a few cost headwinds this year, Paul, which were, we flagged these well at our full year results. You've got an increase in fuel costs. You've got an increase in national insurance, and these are things that are hitting all businesses. Business rates are coming back up to the full level, and of course we've got our annualizing of our kind of PLC costs and the costs that we put in last year to really strengthen the business from an employee perspective. So there's a few cost headwinds. That being said, marketing slightly more expensive online. We are seeing a higher cost per click, but we're being quite careful to make sure that we keep a lid on those marketing costs. Something that we've stated at the IPO and at our results is, our business model is not about growth at all costs. We want to have a good, profitable business. Even though we're making these market share gains, it's not at a 0% margin basis. So yeah, there are a few cost headwinds, which means margin might not be what it was last year, but we flagged that well. And we continue to have a good, profitable base.
Yeah. And then just Mark, just on the sort of like the future growth opportunities to say in the UK with geographical expansion and products, etc. Basically adding product range. Just to talk us through that, because if you can do 4% in a bad market, what can you do when the market improves?
Well, exactly, Paul. Yeah, it's all about being ready for when the market turns, isn't it? We've baked in the overhead already. We've got room for plenty of expansion. So we've got excess of vehicles. We've got the right amount of drivers, so we can expand. Well, we can certainly push on from when the market turns. We're already covering, say 95% of the mainland, England, Scotland, and Wales. We don't obviously deliver to Northern Ireland or Ireland, so we're already going to the vast proportion of the chimney pots, and so we've got no intention of going any further. We're not going to open up any more satellite distribution centres, like a competition run, so we've got to keep it lean, keen at business. That's what the idea is. We don't want to incur any extra overhead. There's just no point. We've got a great business model that works. We've proved it works, and we just need more people to actually have heard of us now. That's the key. So it really is.
And then just turn into sort of like all things sort of environmental and ESG, etc. I mean, one thing I hadn't realised was obviously the proposition. You can take away the old, appliance, minor dishwasher, and get that sort of like removed and recycled, etc. But equally, with new appliances and like cookers and stuff like that, they're more energy efficient. Do you want to talk us through the sort of the the environmental and the energy sort of like angle of that of what you guys do?
Yeah, so as you mentioned, Paul, we will take away your old appliance. We make sure that gets recycled properly to the correct standards. I think we did that for you as well, Paul.
Yeah, you did, yeah.
Yeah, we'll take away your packaging. We make sure that all the packaging is recycled correctly as well, be it your cardboard, plastic, polythene. So we find a lot of customers take us up on that. It makes their life a lot easier. We also carbon offset all of the fuel used in the deliveries. So we're effectively giving them carbon neutrally. So we pay to carbon offset that with all sorts of projects around the world. And then in terms of eco appliances, anything that's rated A or above is notified on our website with an eco-friendly label. So we just flag it to the customer that if you are really looking for an upgrade in your product, make sure that you're using less utilities in this high-cost utility environment. We really flag to you on the website, these are the ones that are eco-friendly, and we find a lot of people, think that's helpful.
Okay, yeah, good. And then Mark, in terms of sort of like if we actually do have sort of like you know, even tougher recession or whatever like that. I mean, you mentioned last time, sort of 80% of the products were distressed. I mean, mine was a distressed purchase of a dishwasher.
Yeah, that was just you paying for it, Paul, I
think. Yeah, you're probably right. I was part of, well, actually, wasn't it? It was a very good price, actually.
Absolutely. Well, I know that because I'll make sure of that.
Yeah, yeah.
That's what we do. We check everything. It's all electronically priced. So the market moves minimum twice a day. Our prices shift in line with the market. Yeah, we don't look to undercut. We don't need to. We've already got the best service.
But you've got quite a resilient type of model there. If most of it's sort of, a lot of it's sort of, you know, devices which go kaput and you replace.
Well, exactly. Well, 80%, like you said, is a distressed purchase. You know, the washing machine goes wrong, you need a new one. And we know that we see that we're taking a lot of business from the likes of John Lewis. That's the real key growth area for us. That's a target audience.
Mm. And then just actually on that, Mark, in terms of the sort of the market share, I think the trading update say it was over 2% was your online, you know, share now, and you're targeting around about 10% ultimately of a sort of 5.5 billion, you know, £5 billion market, etc. This is an environment actually that seems to be, albeit painful for everybody, is actually really driving your business model, isn't it? In terms of the strong get stronger.
Yeah, well, it's always been painful. It's a very difficult market to operate in, Paul. But you know, you just have to. It's all a no. We've got a great set of staff. We really have a fantastic management team, and it's, you know, it's always going to be difficult. But you know, you just have to get on with it and work smarter, don't you? Make sure your model works, which ours certainly does, and just keep maximising every opportunity you see. You know, whatever angle it may be, and adding extra categories, which we will be doing. But at the moment, we're not adding anything extra, but that should be in the next update, hopefully.
Air conditioning would be a good one there, Mark, if you could possibly install.
Yeah, well, we did actually do okay in air conditioning, Paul. We bought a lot. That was some of our aged stock, actually. We had it delivered in February, which was not a particularly good move, I thought, at the time, as I pointed out to one of our buyers. But it was a great decision to have made. So we saw some mega sales, and we cleared the whole lot, every single thing.
Well, I bet you cleared it in 3 days, didn't you? When the temperature gauge went above 40 degrees and blew out most of South London.
Well, we had 105 people in one day queuing up at our click and collect counter to collect air conditioning units. It's quite a few, isn't it?
It is, yeah. I'll tell you, the other bit is actually to get it, you know, for people who are now working hybrid offices at home, get these things installed, you know, get these Echo inverters into people's houses, because there'll be a massive demand for that as well.
Well, I mean that is another point. You know, that was something else I forgot to mention, that, you know, you've got this hybrid working model. So a lot of people, that's why we still see the decline in online sales, or sorry, the online market, I should say. Because you've got people working from home, the kids are off school, so they tend to want to find them something to do, so they take them to the shops. You know, they end up buying in store. You'll see as soon as the kids go back to school, you'll definitely see a shift. I would imagine a structural shift back to online again. You know, as people back sat behind their office desk, the hybrid model slightly declines somewhat, which we have seen certain institutions requesting. Whether or not it actually happens, but you'll definitely see a change back to the growth in online sales. And hopefully we'll be ready there to, well, not hopefully, we are ready there to capitalise on that.
Well, my wife wants to make sure you've reserved her a flipping cooker, okay? Don't sell out of those.
I look forward to seeing that order.
Yeah, no, just finally then, Josh, in terms of future news flow, I'm guessing there's going to be a half-year trading update. Is there sometime, early October or what?
Yeah, we'll do a flash update just after September, so early days of October, just to let you know how we've done for the 6 months trading. Obviously, the update today is for the 4 months trading, so just another 2 months on top, and then we'll do the full interims probably in late November, early December.
Good. Okay. Well, thanks very much, guys. And I would just point investors just to have a look at the sort of like competitive landscape here, because in the good markets you were beating the competition, but actually, given the market's down 20% and you're up over 10% or 13%, then that gap has actually widened in tougher conditions, which just says everything about execution. So well done, guys, and look forward in touching base in early October.
Thanks, Paul. I look
Right.
forward to seeing
Thanks,
your order
Paul.
come through. I'll be waiting eagerly.
Thanks, guys.
Cheers, Paul. Have a lovely day. Thank you.